No, I think philosophically, the Fed is comfortable that if the banks go through the stress testing process and have rigorous governance around assessing what the capital position is, that the banks' boards and management teams should be the ones to set that policy. So, most banks at this point have curtailed share repurchases through at least the second quarter. We've said that we're going to not repurchase any shares through the end of the year. I think it's important that we have capital available for our customers, that we can make loans and support the economy. But it is important to sustain your dividend and to make sure that shareholders are getting a nice return on the stock. And I think the Fed understands the importance of that and keeps the sector investable and hopefully not override the ability of boards and management teams to set their dividend policy.
Bruce, overall, I just wanted to sort of ask you what you feel about the share price performance, not so much of Citizens, but of the broader banking sector. When you see the broader market only down, 10% or so year to date, but banks roughly halving in value or just shy of that, and trading at, 0.5 times, 0.7 times book value, the market is sort of saying, we wonder whether some of these banks are going to go out of business. It's not just a question of earnings being low for a couple of quarters. Is that view wrong? Are you and your sector going to be strong throughout this crisis, and in a couple of years we'll look back on these share prices and think, what an extraordinary buying opportunity for bank investors?
Yeah, I think that is the case. So it's quite surprising that very high-quality banks like ourselves are trading below our book value. The market effectively is saying that we're pricing in a very severe adverse scenario where there's going to be significant credit losses and also a big downdraft in your profitability and therefore ability to absorb some of those credit losses. Frankly, I don't really see that. So almost any scenario that we've been modeling, the credit losses can be covered with what we have in terms of capital and also the profitability we have. First quarter, we were up 3% year on year. Our tangible book value per share has been stable at $32. I just think at this point, there's too much uncertainty and there's too much unknown for investors to really take a confident position and back up the truck and start buying these banks. And so they're chasing sectors like the big tech stocks who are benefiting, are doing very well through the COVID situation. But there's not a lot of glory at this point in buying into banks. I think folks would like to see a little more visibility in terms of how's the economy recovering, what does the next round of reserving look like before they start to wade back into the water and put money to work in bank stocks.